This is In the Final Analysis. I'm Jim Yockey.
Welcome to the In the Final Analysis podcast. Here is your host, Jim Yockey, and I'm the Media Support Manager, Kylie. Welcome to episode 8 of In the Final Analysis. If you remember from our last episode, we hinted that today we'll be talking about how your emotions relate to your financial journey, especially when it may come to happiness. So we kind of kicked back and forth if we wanted to talk about that age-old adage, does money buy happiness? And we were like, that's not quite what we want to talk about. And then we looked at Jim's book, Money Moves, and the idea of if the goal is to find wealth and happiness, where do you look? And that still wasn't quite right. So, Jim, what I want to have you talk about today is something that everyone may hear us talk about all the time, is that money isn't magic. It's what you do with money that's magic. And so, Jim, if you could please kind of touch on what people may be looking for or how they're managing their decisions about saving, investing, spending, all of those things that you can do with money, that is magic.
Yeah, when I wrote that book back in 1996, and followed it with some others, but the thought of it in the middle of the book was, really, the truth of the matter is we're trying to find happiness, and money is a vehicle for that, but it's not money that makes the happiness. And so I came up with the phrase that money's not magic. It's what you do with money that's magic. And that's sort of been a baseline of all of my financial services jobs since then. And really the essence of it is that emotions are tied to many things that we do in life. In the kind of emotion is not as important as the intensity of the emotion. And when we're talking about money, we run through a plethora of emotions when we're considering money, when we're considering what we're going to do with money. And that's the key. The key is whatever we're after, whatever we're trying to achieve or have or feel with money has to do with us and our own emotions and our viewpoint and what we're trying to attain in life, not money itself. Money is simply the equipment. It's the tool that we use in order to find solutions for what we're looking for or what we want or the things that we hear about that we want, or the things that we touch and feel and want. And that brings me to a little bit of a point about it, because as human beings, and we've probably since the introduction in essentially 1995 of all of us getting on the internet, we have been bombarded with information. I mean, there is so much of it out there. It's hard to sort through it to understand what's going on in life around us. And so what we do is we build little nuggets of strategies that consist of some kind of process that we use in order to make decisions. And that those decisions, if you think about creating these little nuggets of strategies that we have, and we learn that they work or they don't work. And when they do work, these little strategies, which in psychology we call it heuristic, which is just a rule of thumb, or something we use in order to cut through all the peripheral so that we can get to making a decision. Otherwise, we'll be just immobilized trying to make a decision. So these little nuggets of strategies that we use consist of emotions, rationality, research, we look at things differently, or we need to hear more information, or we like to, for example, once we create one of these little things and we want to go buy something, let's say at the store, we can buy a can of beans, for example. And since our experience has led us to making a decision about what kinds of beans we want to buy at the store, we go through zipping through this little nugget automatically, subconsciously. We go through all of the steps of that strategy to pick the one that we have used in the past successfully. Same thing with a car. A car's a different kind of a situation, and it has more impact on the money that we have and can get in the future. So we come through the same probability of using the same strategic components of that strategy. Again, subconsciously, we might get in and look how we see the car, we like the color of it, we get inside of it, we smell the new
New car smell.
leather,
Yeah.
new car smell, and we drive it, and we get the feeling that this is really what I want, and it will make me happy. And then you talk about the money that you have and the conduit of owning what you want and having what you want. So money is really more of a tool that creates the magic of us living. And it's these heuristics, these rule of thumbs, these little nuggets of strategies that we use to make decisions. And sometimes they're very familiar. The methodology, the process is exactly the same. It just the topic changes and the breadth of the decision changes and the welcomeness of the emotion changes. And so that's how we're built. And money's no different. The interesting thing about money, when in terms of investing, is there's far more emotions involved. And the industry, my industry, tries to have assessments or tests that we can take that will help us figure out how much risk we can tolerate in our emotions. We haven't accomplished that very well in the industry, and so it's not to maybe get off on a side track, but when somebody's sitting down and talking about investing, they're usually going to talk to some kind of a financial advisor, or a registered investment advisor, or somebody is going to be talking to them out of clear necessity, because it's those advisors that can provide you access to making an investment. Also, the same holds true in a 401k. Oftentimes, we're not talking to a professional when we're talking to one of our workmates, or a neighbor that has his or her own 401k, and you kind of talk about, well, I did this and that and the other, and it worked for me. So you kind of think, well, maybe it'll work for me too. Now, interestingly enough, when it comes to retirement assets at companies where you have a 401k, that 401k means you are making investments in a retirement asset, and your company's probably making some sort of a contribution to it as well. They give you lots of information you can go find on their website. But the thing that's missing, and by the way, this is required by the Department of Labor. The companies that have 401k plans are responsible to give you a minimum amount of choices. And that includes a balanced fund, a growth fund, cash, alternative, a bond fund, 3 or 4 of those basic categories of investing. But also they require you to give added information and education in order to make a reasonable decision. And the idea today is, well, we'll put every investment that you could possibly think of into your choice list for 401ks, And number two, we'll make all kinds of little things on the website that you can go and find out what kind of an investor you are, or have them give you a choice that says, okay, I want to be this balanced, or I want to be this growth oriented, or whatever. But they don't teach you how to make the concerted decision for yourself. You have to go inside yourself and say, well, really, what kind of investor am I? How much risk do I want to take? What do I want to try to create in the future? Do I want to try to create success, or a college education for somebody, or retirement? Or am I trying to avoid mistakes that I've made in the past? Well, we have these rules of thumb that lead us into making a decision about how we're going to be invested. And when you're in front of a financial advisor, or a registered investment advisor, or whatever, you're going to ask them, well, what do you think? Just like we would ask our neighbor, what do you think? You know, so, and quite frankly, our industry, financial services industry, doesn't really do a good job. And it's up to the individual financial advisor to help know you sufficiently to begin to understand your tolerance for risk, your emotional tolerance for risk. And that's why, I've done a lot of research on that, and we're still working on it to try to help people make more reasonable decisions, and take into consideration that big question on the horizon, which is, how much can I take? That emotional question that I have. What happens if what happens if I comes right after the I think I will, you know. So it's kind of, emotions play a really big part in all of this. And emotion also is totally related to your success at finding happiness. Money is just, it's like having fuel in a car. Okay, you want to go faster, so you mash on the accelerator and you go faster. Well, making decisions with money to invest, for example, is exactly like that. How fast do you want to go? And when do you want to stop on the brake? Or do you want to use a little bit of the accelerator and a little bit of the brake? I mean, kind of. So the faster you want it to move, the more risk you're going to be taking, and you have to understand that and make friends with it. And all things, when you look at markets, even today, we have so much uncertainty in the marketplace today. And that brings about another challenge that we have in terms of controlling our emotions.
No, that makes
Long answer to a short question. Sorry.
No, thank you. I love the analogy of the gas and the brake in our car. I think that makes a lot of sense for how money is being used as a tool in a very emotionally charged way. You are either driven by uncertainty with your money, or you're driven by a positive goal towards something with your money. Confidence, yes, perfectly. Mm-hmm. Confidence. We talk a lot about uncertainty here in the final analysis, and ways to try to help mitigate that by talking to a professional and getting to know your money mindset. In your experience, when these uncertainty clouds kind of start to emerge, how do you feel like people can make better sense of their emotions and their decision-making process to weather that uncertainty and try to ease their concerns?
Well, I can look at this from a couple of different perspectives. One is from the advisor's point of view, which means there are fundamental things that I would hope to know quickly with someone sitting across the desk or next to me or whatever. One is, are they looking out in the future to set goals that they want to reach? And what's the complexity and the size of that desire? There are some people that do a lot of planning and setting goals out into the future, and they sort of look at life that way. And then there are some people that they are always looking back to say, I don't want that to ever happen to me in life. I don't want to make those mistakes. I have had this mistake, and so I want to have something that I know is not going to be similar. Psychology's approach avoidance. There's been a whole lot of studies on approach avoidance, and I have changed it a little bit to say, look, am I looking out toward a goal, or am I trying to avoid things that have happened to me in the past? And those things I'm looking for when I'm talking to a client or anybody else that wants to talk about this kind of stuff. But the fact of the matter is, I can generally get to some of that by just asking one question, and that is, what do you want? And as a human, when you're asked a simple question like that, you most often are going to give a simple answer. Well, I want to do this out in the future. This is where I want my life to be. This is what I want to be able to do or enjoy or whatever. Or someone might say, well, I want to avoid those things. So it's their process, and they articulate their process, because then I know whether they are trying to move away from something or towards something. And if I just know that little piece, then I know how to begin to ascertain how much risk they're likely comfortable with. Someone that's looking out in the future and has goals, they understand there are going to be bumps along the way, and they may have to adjust going the way. And so you talk with them about making choices in a different way than you would with somebody that says, I can't afford to do this before. But one of the second things that you could actually ask them to, and these are things that you can ask yourself in order to help you make decisions. But you can ask either one of those kinds of people. You can say, well, how did you choose before? You made investments in your 401k, or you made investments, or you bought a new car or whatever, but how did you make that choice? I'm asking the how question. I ask the what question, what do you want? And then the how question is, how did you do that? And that will also give me another clue as to their emotional tolerance for risk. And so from a personal, and I want to just clarify one fundamental thing that's going on throughout the history, my history of financial services. We have grown, and the availability of people to talk to about investing has changed. And you have the large broker-dealer firms, you have banks, you have, and then you have the independent financial advisor. And the important feature of the independent financial advisor in this country, and actually it's probably the growing, it's, I don't know this for a fact, but I think it's probably the part of the field that is growing faster than most of the others. And the fact of the matter is that independent financial advisor, that you sit down in the office and you talk to them, they can look in you in the eyes. They can have a serious one-to-one conversation with you, and it enables them to help you decide how much risk you should take and how much risk you can take emotionally. And that's what the function of an independent financial advisor truly is to get to that point, because they're the closest person to the person whose precious money belongs to, So that's sort of also a long answer to a question. Now then you come to a situation where we have so much change that's going on that we're exposed to from the internet, from television, from everywhere. Um, and it causes us to be almost overwhelmed with information. And so it creates a stumbling block for us to make decisions as to what we should do in that moment in time. And that's kind of where we are today, at least in this country. And I'm sure it's probably the same globally.
No, I think that the magic of the human connection is a great way to mitigate doom scrolling that is so prevalent right now. Like when everything is coming at you being negative, 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 being able to just sit down with someone who knows their stuff to be like, all right, here's the situation and how it affects your life and your finances.
Mm.
And here's what we can do with your feelings in a productive way for you. I think that's the magic, I think, that we were talking about earlier. I think that's something that you can do with money that's magic is talk to someone who can help you.
Oh, that's for sure. Um, there's things you can do to help yourself too. First of all, you can just turn it off.
Of
You
course.
know,
Which
as a
is
matter of fact,
a good
yeah,
idea for so many people to take breaks.
yeah, really. Uh, as a matter of fact, I think that the piece on our website about don't panic
The
has some
white
of these
paper.
things. So and you back up and look at the big picture. Some of the things that we're going through today, we've been through before. Generationally, we've been through. You just have to know a little bit of history to realize that whatever we're going through today is probably not what we're going to go through tomorrow. Uh,
Right.
Mainly, you just need to stop, take a big breath, and say, okay, am I in danger today? Am I safe today? You know, you have to sort of take all the news and all of the input that you're getting on the web and just say, hey, wait a minute, where's the truth in all of this? And what do I really believe? And what has history shown that we've lived through a lot of the same stuff over and over again. It's like, you know, Groundhog Day.
Truly. Yeah. And for listeners, if you want to check out our Don't Panic white paper that we just mentioned, you can find that in the special news tab on our website, wisdomchoice.net. We originally put that out on the kind of height of the COVID-19 pandemic. So a lot of it is still very applicable, um, both for your financial health and your mental health. And you can also keep watching that space, our white papers tab, for some future content on your financial wellness and financial well-being.
Bottom line is this: the in the final analysis, take a deep breath and realize that tomorrow will still come.
Tomorrow will still come.
Mm-hmm.
And tomorrow you can call us if you're still uncertain.
That'd be good.
Yeah. And actually one of the other resources that I wanted to make sure that we mention in thinking about how you feel about money, what is your money mindset? In our Your Money Emotions tab of the financial intelligence resources on our website is the Financial Virtue Survey by Atlas Point, which is a survey very backed by science that results in a report that's unique to you and your financial preferences and how you can make clear, thoughtful choices about your financial well-being. And that's one of the ways that you can reach out to us in a kind of a soft way if you'd like to just kind of get started knowing yourself better with your finances.
Yes, and that's really a good idea. And not only have I been, and we all have been in financial services around here for quite a while, but I also have a master's in psychological brain sciences. So I make dadgum sure that we have the right information on our website as well that's useful for you. So, really, in the financial world, those final choices can be aided by your research. So, go to the website and get some of it.
Yeah, absolutely. Yeah, that's one of the reasons why behavioral finance is so important to us here at Wisdom and making sure that we make that connection with every client or potential client who walks in our door to understand where they're coming from and where we can help take them.
That's great.
Right. So again, you can find all of that on our website at www.wisdomchoice.net. And yeah, give us a call, take any of our surveys or bias pulse checks that we have there. We also have tons of articles and videos in our financial intelligence resources to help you kind of get more information in a way that is respectful to how much input that you're getting from the world. And as always, you can give us a call or send us an email so that we can set up an appointment and discuss where you're at and how we can help. So that's all the time that we have for today. Thank you all so much for listening. Again, you can find more information and more episodes of In the Final Analysis at www.wisdomchoice.net. Thanks.
Thanks for tuning in to The Final Analysis. We try to keep you informed. Be sure that you're on the email list and call us if you have any questions whatsoever. Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professionals before making important investment decisions. Securities offered through Cambridge Investment Research, Inc., a registered broker-dealer, member FINRA SIPC. Advisory services through Cambridge Investment Research Advisors, Inc., a registered investment advisor. Cambridge and Wisdom Financial Management, LLC are not affiliated.